Hey guys, Credible Crypto here, and this is the much-awaited uranium stock update. The last time I made a uranium video was a few months ago, and I posted some charts recently about last week. This video is going to cover my personal holdings, of which there are four, as well as some of the other uranium stocks that you guys commented about in my Twitter post. I mentioned that I'd be posting a video on uranium and to post the stocks that you're interested in below. So I'm going to be picking a few of those to cover as well in this video, and we'll talk about the uranium sector in general. Typically, guys, most of these stocks look very similar right now. The entire sector is on a major rise after a major capitulation event, and so many of these stocks structurally look very similar. Some have less price action for us to analyze, some have a longer price history for us to analyze. So each chart will vary in that sense. Some are more clear than others, but generally, guys, they're all following pretty much the same pattern here. All right. So I'm going to start off by going over the four holdings that I currently have and the ones that I've posted charts on my feed on Credible Stocks, and we'll go over those first, and then we'll dive into some of the other ones and talk about those as well. So we'll start off with UUU, guys. This is a stock that I've been covering for a while now. Original Incredible Crypto, now will be covered in Credible Stocks. And we've been covering it for about 6 to 12 months at this point in time, I want to say. And a lot of interesting developments have occurred in that time. I had a thread going on Credible Crypto a while ago, and this was, let's see here, this goes back to January, February, March, April. So this was 6 months ago. And this is prior to our major capitulation event, guys. We had a rejection off of this key level that I'd marked off, and I mentioned that this failed breakout that we had right here, where we popped above this resistance and then immediately rejected back, is a signal that more pain is to come, and it has. I now expect the lows at 130 to be cleared. That being said, now is not the time to get shaken out. Zoom out to keep things in perspective. And so this was a chart that I had posted, guys. Essentially, we had formed the bottom here, popped up, came back into our range, and essentially I believe this since 2017 has been one large accumulation range. Essentially a period of time in which larger players will fill their bags before the next bull run takes off. The wave count prior to this was very clear. We had a triangle that broke down into a capitulation event, dropping from 250 down to 130, about a 50% drop in a matter of weeks, and that was essentially established the bottom of the range of the selling climax. From there, we saw accumulation phase, with some fake breakouts to the upside that ended up pushing back into this region. This drop here was, what was the event that caused this? The delay of the, I can't remember what event caused this, but it was an event that we were all watching, and you guys already know what I'm talking about if you've been following UUUU. But a delay or something, I can't remember what event it was that caused this major drop. And then we consolidated here, rejected this region, and then I mentioned that I'd be looking now for a clear of these lows, right? These equal lows oftentimes are not left untouched. They're usually cleared. The chances of a double bottom are rare. And so I was expecting a drop below the lows here at 130, essentially a little shakeout before we reclaim this range, meandered about in this region for another period of months, and then eventually broke out. So what followed, guys, was pretty much that. This one kind of shows things in a little bit more depth. All-time highs, capitulation drop, increase in volume, which shows us that big players are accumulating in this region. And then what happened after that? Let's take a look. So guys, what happened after that was, as expected, the rejection here led to a drop that did clear our lows at 130, and it was a massive drop to the downside. And I mentioned earlier that, again, expect the lows to be cleared. That being said, now is not the time to get shaken out, zoom out to keep things in perspective. Essentially, this was a buy the dip op. Panic selling is never a good idea, and that's essentially what these people did here at the bottom. And if you were able to scoop up some of these shares at these prices, incredible buy, because we've now more than doubled those levels already. But essentially, we dropped below here and immediately popped back up and reclaimed the range low at $1.30, and so everything was going according to plan. Now, the most recent update was posted right here, and I mentioned following my last update on UUUU, we're approaching a mid-level resistance region where we may get a pullback for silent buyers to enter. Ideal entry would be a retest of the red line at 130, which is right here, but anywhere down to 150 is a great place to add. This was last week, and at this point we're at 190, pushing up against this major resistance region, and let's take a look at what we have today. So this is what we have today, guys. As you can see, we pushed up against that same resistance region that we were at. We were at 190 at the time. We pushed up all the way into our major resistance and range high here at 130. So a sharp rejection and a push back down. And we're now trading right below our key major resistance. And the key resistance, the high of the range. Now, some got freaked out when they saw this. They saw a move to 235. They saw immediate drop back down to 180, and they were panicking. Guys, no reason to panic here. We had a major resistance level. This is the level that we essentially were treading water on until we broke down and had a capitulation. So this is a very significant resistance level, and it does not surprise me that we didn't break it on the first go. Usually we do not, all right? Usually this is a point where buyers are rushing in right into resistance, and they're buying all the way up until these levels, and then we see a massive rejection because we're at major resistance, and then sometimes they'll panic and they'll get out again, and they've just lost. I mean, anyone who bought in here at the highs of 230 was buying right into major resistance, which is why it's so important, guys, to approach these markets in a calm and rational manner. Do not let emotion get to you. Do not FOMO into longs at resistance, because more likely than not, you're going to be underwater shortly after. So anyone who bought above $2 has now found themselves underwater. The good news is, guys, this is temporary in my opinion. I think that we are still going to get a pullback here to 150 to 130, as I mentioned in my last update, before we do actually break this level and continue to the upside. So the key of this is don't get shaken out buying and selling the chop, guys. Focus on the big picture. We've made a major recovery after a major drop. I mean, this is it's over 100% increase, a 200% gain after a major drop, guys. So right now is not the time to be selling. Even if you think we're going to visit 130 or 150, which I do think is quite likely, it's not the time to be getting out and fishing lower. Hold what you have and add on the dips if anything, guys. When you buy high and then you sell at a loss to get in lower, you're just setting yourself up for an emotional roller coaster. If 130 isn't met for whatever reason, if some great news comes out and we end up pumping through this, you're going to panic, FOMO, and long again into the next resistance, which is right here at around $3, right? So don't get in the habit of buying and selling on a whim. Keep the high time frame levels in mind. And at this stage of the game, you really just want to be adding on dips rather than selling to buy lower. It's the same thing that I'm recommending for crypto markets at this point in time. And I've said this since we closed our Bitcoin monthly above 6.4K. Now is not the time to be selling to buy lower. Rather, you should be holding on to what you've accumulated for new highs and buying the dips if and when they arise, because dips are never guaranteed, although they may be likely. Anyways, let's take a look, guys. What I'm expecting now is essentially we've rejected the resistance for now, which is fine. I'd expect now a pullback to some extent, ideally no lower than this 130, and really we shouldn't go any lower than 130. Buyers should step in at this 130 level, the prior support that was lost and that we've now reclaimed. A retest would be beautiful. It'd be ideal. It'd be everything that I'd want to see. With momentum the way that it is with uranium stocks, I don't know if we get that ideal retest at 130, but that is the ideal place to enter along here. And a retest would be beautiful if we could get it, all right? Now, we may not necessarily get that retest. We may push a little bit lower. The next area of interest that I'd be eyeing up is going to be this level right here. And this is right between 150 to 165. So it's possible that we pull back just to this region rather than getting all the way down to 130, and that this region acts as support and we consolidate here before pumping to the upside again. That is the other possibility. So if I were looking to add to my position here, I would set my initial buy orders here in the 150 to 160 range and set a second chunk of buy orders down here around 130 in case we do visit that region. Of course, that's not guaranteed, and it'll depend on the strength of the market whether or not we actually get down to these 130 levels. That being said, I think the 150 to 160 level is a very logical place for a retest. And I think that level, I'm not going to say is guaranteed, but I think it's highly likely that we do revisit the 150 to 160 level. And that would be a healthy pullback. It would not be anything to be concerned about. It would not be anything to panic over. It'd be a very logical, very healthy pullback to essentially facilitate the next pump to the upside, all right? When we get these types of vertical moves, pullbacks are healthy. And the longer it takes for this pullback to occur, the more aggressive the next pump to the upside can be. Essentially, we're building a base off of which we should launch for the next leg to the upside. So any pullbacks down to 150 to 160 for you. And if we get any pullbacks to 130 are buy the dip opportunities in my opinion, all right? Now, once we manage to clear this range high here between 220 to 260, the next immediate level of resistance is going to be this level right here. All right, this is going to be the next immediate level of resistance. And what we're going to be looking for at that point is a break above this level. And then we want to see a retracement back down and then we want to see some consolidation and then another pop to the upside, right? So once this level is cleared, your next entrance, potential entry should be on a break and retest of the $4 region, all right? Now again, guys, that's already 2 times off of where we are now. So this is, I mean, the gains are going to be significant here, guys. Massive upside potential in all uranium stocks, and I can't emphasize that enough. This range up to $4 is just our bottom range, guys. It's, I mean, or I should say this range up to 250 down to 125 is this just accumulation, okay? After accumulation comes the markup phase, and after accumulation of 3 to 4 years, we can expect markup to be quite significant, okay? Quite significant. We're essentially at the bottom of the market here. So upside targets are going to be very significant from current levels, okay? So again, once we get above this level, we want to get above $4, and once we can reclaim $4 and retest it, it'll provide another buy op for the next leg to the upside. So that is my analysis on guys. Another thing, all of these stocks usually have Canadian counterparts. This is the U.S. The U.S. traded on the U.S. exchange, but a lot of these stocks are traded on Canadian exchanges as well. I'm not going to be covering both the U.S. and the Canadian exchanges because it'd be too much. It'd be a waste of time to go over both for each market. The levels are going to vary slightly, but you can see what I'm looking for here and kind of match it along with what we're seeing on the Canadian charts if that's what you're trading. I'm in the United States, so I'm personally going to focus on the United States charts, but the Canadian charts should look very similar. All right. Let's take a look at the next stock of interest, and that is going to be NXE, guys. NXE is another one of my top 3 holdings. Let's take a look at what the chart looks like now. NXE in a similar position, guys. We saw capitulation down to our last stand area, essentially, down to about 45 cents. And then we saw an immediate pop back up, and now we're at $1.25. So we've tripled off the lows, a 300% rally off the lows. I posted this chart last week that we're seeing a test of major resistance now, and a pullback to key support is the ideal buying up here right around $1. So let's take a look at NXE today and see how things have progressed from that level. All right, guys, NXE today, we've still pushed up. We're higher than we were in my last chart. We're at 135 now. This is our major resistance, guys. Remember, do not FOMO into major resistance. This is a 3-weekly candle, which means as long as we don't get a 3-weekly candle above this level of resistance, we have not cleared it yet. We have not broken it. It's still resistance, okay? If we close this 3-weekly candle, which closes on the 11th of May in about a week, above this level, that is bullish, and that indicates that this resistance has been overcome. But until then, although we're currently trading above it, we have not cleared the resistance yet. It should still act as resistance here, and with my expectation that we will see a pullback in traditional equities here across the board soon, I would not be surprised to see a pullback here as well, and I don't think that we're going to break this in the first go as well. Now, if and when we do get that pullback, guys, the ideal entry level is going to be right here at about $1, anywhere between 93 to $1, or 93 cents to $1, about 30% lower than where we are now. That is going to be your ideal entry, okay? It's possible that we find support a little bit higher here at around 110 to 115, so I would essentially look to be laddering in buys on NXE, if that's what I'm looking to buy, anywhere between this range of 90 cents to about 115. Okay, currently sitting at 35 cents. So we're looking for a pullback of anywhere between 15 to 30%, and that would be my ideal area to add to my position. Okay, what I recommend, guys, is don't set all your bids at the bottom, don't set all your bids at the top. Ladder bids throughout this region. You can probably set ladders, like for example, I'd put 20% of my bids at $1.10. I'd put 20% of my bids at $1.02. I'd put 20% of my bids at 97 cents, and then I'd put the remaining 10% at the top and the remaining 10% at the bottom. That way you get filled at least partially on a retest, and if it doesn't go as deep as possible, at least you have some skin in the game. You don't miss out completely. If it does push all the way, your average entry would be right in the middle, about $1.02, which is a great average entry if you started scaling it at 115. So that's the way that you guys should be approaching this if you're looking to buy this dip. No concern at all unless 93 cents is lost on a weekly time frame, which I don't believe it will be. I think that we've seen the bottom. This is just a major view reversal, and now is the time to be buying the dips, no doubt. So that's my analysis here on NXE, guys. Beautiful chart, beautiful recovery. Looking to buy, again, anywhere between 93 cents to $1.10 on NXE here. All right, guys, the next coin, or the next stock that we're going to be looking at is GVXF, also known as GXU on the Canadian exchanges. This is one of my favorite stocks. just because of the massive upside potential that I think it has here. Let's take a look at the chart, guys. I posted this last week and essentially was showing you guys that we have major resistance here at 15 to 17 cents. And currently we've finally broken out of a major downtrend line that has been in place for now 3 years. We tested it once, twice, 3 times, 4 times, 5 times, and on the 6th time we finally, for the first time in 3 years, broken above it after a major capitulation event and a major V reversal. So this is very bullish. This looks very nice. Let's take a look at what the chart looks like today. All right, so here it is, guys. Pretty much looks the same as what I posted, except now we've gone and retested our trendline breakout. So this is a very nice area for an initial retest. Now we've already tested it. There's a couple of possibilities that I can see happening here. All right, ideally we tread down a little bit and retest this green level. That would be the perfect retest. We have a level here that acted as support, and that was finally lost when we capitulated, and we finally reclaimed it. So essentially a reclaim of this level with a retest of this green box would be ideal before continuation up to our next major resistance. I don't know how long it'll take. The uranium market has been quite bullish lately. Of course, it does generally move slower than most other markets, so the pullbacks could last a bit longer. Note that our run up started March, and it's now May. So March, April, May. It took 3 months to make this move. So consolidation for another 2 to 3 months, or sideways movement for another 2 to 3 months before we attack the next major resistance would not necessarily be unexpected, guys. And it's hard to imagine with all the momentum that we've been seeing lately in the uranium markets, but pullbacks will happen. They're healthy again, and they will take time. They generally take longer than the impulses that precede them. So a pullback that takes another 2 to 3 months, April, we're in May right now, June, July, August, or maybe September, is nothing to be concerned about and completely normal. It just gives us more time to accumulate at these levels. But essentially, guys, I would like us to hold this downtrend line that we now broken out of. A quick wick into this region here between 9 to 10 cents would be beautiful to see. I'd like it to get bought up, and I'd like us to maintain this downtrend line on the high time frames, okay? If we can do that, which I think we will, then I think we push up to our next major resistance at 16 cents. And guys, the exciting thing about GVXF is my first target is 34 cents. I'm not selling a single share of this stock until we clear 34 cents, and even then, I'll probably hold on to this for another few years, to be honest. I think the potential for this stock is massive. This is a bottom that was put in 2016, and we saw an impulsive move off of that. We've now corrected the impulsive move, and at bare minimum we expect the next move to clear this high. The problem is there's not much price history to go off of here with GVXF, so it's difficult to give us any targets to the upside when we don't know what's happened in the past. But yeah, first major resistance at 16 to 18 cents, and then once we get above that, it's clear skies to 34 cents, and then above that we'll see where we go, guys. But massive upside potential here on GVXF, and we should have some time to buy this dip. If I was looking to buy this dip, guys, again, I would set bids anywhere between 9 cents to, I mean, we've already looked at this. We've already tapped 10.5 cents, okay? So 9 cents really, 9.5 cents really isn't out of the question here when we've already tapped 10.5. This is a volatile stock, guys. So I would most definitely set bids down to 9.5 cents, even 9 to 10 cents. That's where I would look to bid this thing. If you're not in any position yet, you can go 9 to 10.5 cents. I think that'd be sufficient, but that's where I'd look to buy this dip here. That is going to be a drop of about anywhere between 10 to 20% here on GVXF, an amazing buy the dip opportunity. I already have a partial position filled, so I'll probably be bidding the lower region of this buy zone, but if you guys are not in yet and you're looking for a place to start building a position, again, anywhere between 9 cents to about 10.5 cents would be ideal to start laddering in my opinion. Let's go ahead and take a look at the next stock of interest, guys. All right, guys, and my next stock of interest is going to be Cameco. CCJ is the ticker on the U.S. exchange, and a different ticker on the Canadian exchange. But let's take a look at Cameco. We've been covering Cameco since July 15th of 2019. So July, wow, it's almost been a year that we've been covering Cameco. Again, I mentioned that uranium stocks will move slower than crypto, obviously, and so we've been covering this stock for a year. And a year ago, I mapped out essentially two areas of interest, right? A primary demand zone and a secondary demand zone if we were to get some sort of capitulation event that pushes us lower than this primary demand zone. And guys, lo and behold, we saw COVID-19, and that was our capitulation event. And we literally tapped the secondary demand zone to the dot, all right? Keep in mind, this chart was made 6 months prior to when this event happened. And then COVID happened. We saw panic selling. The entire markets took a big hit, and we saw a dip straight to our secondary demand zone that was instantly bought back up, and we've now pushed back above into our primary demand zone. Let's take a look at what the chart looks like today. All right, guys, so this is Cameco today. This is that same chart. We tapped our secondary demand zone, and let's go to the lower time frame. So we now popped back above our primary demand zone in a very nice, clean, impulsive move here to the upside. And let me show you guys exactly where I'd be interested in laddering bids. Our area of interest for Cameco is going to be between $8 to about $8.64. That's a pretty decent drop here. That is going to be a drop between 16 to 20% here in Cameco. That is the area where I look to place bids to start building a position. I don't actually hold any Cameco myself. I had bought some earlier, but I decided that I wanted to go in higher return stocks. And Cameco, quite frankly, is like the blue chip of the sector. So it's a safer bet than all the others. But that also means that your potential ROI is likely going to be lower as well. So for those that are looking for a safer stock to invest in, Cameco is probably going to be that stock. For those that are looking for higher risk and higher reward stocks to enter, Cameco may not be the best bet for the highest return or highest risk. But it's looking good right now, and we've now cleared a key area of resistance. We've recovered a key area. We've broken market structure to the upside. We had a series of highs, lower highs, lower lows, lower highs, lower lows, and we've broken that on low time frame. Really, it'd be nice to see us get a macro break above about $13, and that would be a macro break in market structure here. That'd be a little bit more significant than what we have now. But as I've always said, we are not expected to break major resistances in the first go. So pullback here would not be unexpected. And again, my area of interest for Cameco is going to be $8 to about $8.67. That pretty much covers, guys, my personal picks, the stocks that I hold, minus Cameco, of course. Actually, there's one more, which is Dennison. So let me go over Dennison real quick. And then we will check out some of the other ones that you guys had requested. So here's Dennison, guys. Dennison is a stock that I own. It's a small company. It's not big like the others, and it's more of a speculative bet that I've picked up. I think that it has good potential, but it's also a lot more risky than some of the other stocks from the research that I've done. So you're definitely going to want to do your due diligence on Dennison. But it is something that I do hold. It's the smallest holding that I have of all the uranium picks that I have because it carries the highest risk in my opinion. But let's take a look at Dennison, guys. Very clear and clean levels here on Dennison. This is the key area of resistance that we're now facing. And as you guys can see, we've wicked up to it and are currently rejecting. And as I've said many times now, we do not expect a break on the first test of major resistance. This is the area that we were essentially consolidating at before we saw our capitulation here at Dennison. Fell down to 18 cents from about 46 cents and has now popped back up to 43 cents. Still very early on with Dennison at the moment. Just want to take a quick look at something here. Okay, wow, that is gorgeous, guys. This is a sight to see. I don't see this very often because most stocks don't drag on this for this long, this low for this long. But guys, wow, this is beautiful. We have a triple classic bullish divergence here on the 3 monthly time frame. That's huge. That's significant. We already know, guys, that higher time frames carry more weight in general, and this is bullish, guys. Wow. So price making lower lows all the time while our size is making higher lows. And this goes all the way back to 2011, guys. This is gorgeous to see here. I didn't notice it earlier. I'm noticing it now, but that is beautiful. Very, very bullish signs here. We've now seen capitulation. We've seen a beautiful bullish candle right into resistance. We now want to reclaim that level to continue higher, and the upside potential, I think, is massive here. Even a very nice, what looks to be a very nice 5-wave move here. 1, 2, 3, 4, 5. So beautiful, guys. Where would I look to enter Dennison if I have not already entered? Or where would I look to add to my position? Dennison is one stock that I will be adding to because I have a very small position in it, and I would like to increase my exposure on Dennison. It looks gorgeous from a high time frame perspective, and I think there's great potential here. So where would I look to buy Dennison, guys? Note that this is our last swing low before our breakdown to capitulation. So this is a key area of support that we've now reclaimed. And just like we saw on UUUU, I would like to see a retest of this level. That would be beautiful. That would be ideal. We may not get it, but it's the ideal place to buy or to add to your position, you guys. Right here around 35 cents would be ideal. We also have this key little order block here that's pretty significant. And it just so happens to line up with our 35-cent region. Let me go ahead here and mark it off. So we have this little level here that is the last the last stand before acceleration to the downside. So this level should act as support now as well. And so that coincides nicely with our swing low. So guys, essentially anywhere between 35 cents to around 38 cents is the ideal place to add onto your positions or to start a position here on Dennison. All right. Now it's possible here that we make a move down to this level at 29 to 32 cents. A wick, I would not want anything more than a wick, but that is possible, right? So this, as you guys can see, we wicked down here, but we held it and then we broke down. In the same way, on a retest of this level, depending on how the markets move, or if we see something, if the general equities are seeing a drop or something, we may get a little wick down to around 30 cents, okay? But that is pretty much the lowest that I'd expect us to go, and the lowest that I'd be comfortable seeing us go. Anything lower than that would be concerning. So if I were here, I would look to bid the 35 to 38 cent region, and below that, the 29 to 32 cent region, in case we get some random lucky wick that goes a little bit lower and pushes us a little bit lower than expected to the downside. I wouldn't put my whole stack here. I definitely have bids here because I don't think it's guaranteed that we reach here. I mean, nothing's guaranteed, but I don't think it's necessarily highly likely that we make this visit. This is kind of like sort of if there's unexpected circumstances or a fundamental event that pushes us lower than we should go here on Dennison. Otherwise, I expect the region here between 35 to 38 cents to hold. So that is where I'd look to add Dennison, guys. So that covers all my holdings: Dennison, GVXXF, NXC, and UUUU. Let's take a look at some of the other requests that you guys had at this point in time. So FCUUF, also known as FCU on the Canadian exchanges, is a stock that you guys have requested in the comments. Let's see here if I can see anything significant on FCU. It looks pretty much like most of the other stocks. Unfortunately, there's not much price history for me to go off of here. Let me see if I can find some more. Not really enough price history for me to make a great analysis on this stock here. On the Canadian exchange and on the US exchange, there really isn't much here to go off of. So let me see here. And I haven't done fundamental research on FCU, by the way. So I've done fundamental research on GVXXF, NXC, UUU, CCJ. The ones that I hold, I've done fundamental research on. I haven't done fundamental research on anything I don't hold, and I will never buy anything without doing fundamental research. So despite me pointing out all these things about the technical charts, guys, I'm emphasizing, you need to do your research on the fundamentals before you pull the trigger on any of these, because you're not going to have enough confidence to hold through events like this, and they will happen again down the road. Of course, I think the bottom is in, so not at these levels, but we'll get volatility as we go up, and you won't be able to hold unless you're familiar with the fundamentals. So I can't emphasize enough how important studying the fundamentals is. But here on FCU, like I said, there really isn't that much for me to go off of. So let me see if I can mark off some key levels here. But honestly, I'd like to see more price action play out here before I make any major conclusions about where we may be headed. But what's obvious from what I can see is that it seems FCU has fallen a little bit more than some of the other stocks here. And I can see that this level, whatever it may be, is very significant. It looks like this is where a capitulation started around 60 cents. And FCU fell all the way down to 10 cents, a pretty massive drop here. So really, I'd like to see a reclamation of around 50 cents to get comfortable with FCU. Again, I think the bottom is in for this sector, so I would not be I'm not too concerned about FCU not making a recovery. It's just I need to see a little bit more price action play out because of the limited price history to make any conclusion to recommend a buy essentially. But the obvious buy would be a reclamation of this level here and a buy at around 50 cents. You guys can be more aggressive if you like and start bidding the lower regions here. That's completely fine if you believe in the company. But for those who want to wait for more confirmation, a reclamation around 50 cents would probably be ideal, and what I'd be looking for if I were to enter this particular stock, just because I haven't, again, done much research on it yet. So that is FCU or FCU UF. Let's take a look at some of the others. I think Paladin was one that was mentioned a few times here. And not much to go on from what I can see here either. So I would like to, let's see here. Let me see if there's any more price information here. I think it ticker's PDN. Yep. Okay. So yeah, not really much to go off of here on Paladin, guys. Okay, let's see. This is it. Here you go. So this is a level that I'd be interested in before a capitulation, but we're still making I mean, this would be an aggressive entry. We're still making lower highs and lower lows since our high here at $10. Yeah, we're now at 10 cents, guys. It's pretty crazy to think about. But yeah, if we can break 26 cents, that would be bullish. Again, the aggressive entry. If you think like me that the bottom is in for uranium stocks and you're bullish on the fundamentals like I am, this would be the very most aggressive entry that you could look to enter, anywhere between 8 to 9 cents here in Paladin. Would not expect any lower than that. That is where our breakdown started. That level has now been closed over on the weekly and will likely close over on the 3-weekly. So once we do close, oh, it did close over on the 3-weekly. Yeah, so any retest of this level here between 8 to 9 cents, that is what I'd look for to hold on the high time frames. And then hopefully we continue to push up from there. We do have resistance up above us, quite drastically all the way up essentially. So it's not necessarily going to be easy to get above these levels, but this is going to be your aggressive entry if you have done your research on Paladin and you're looking for a buy, right? Let's see what else I can cover. I think that honestly, a lot of these charts look the same at this point. So I think you guys have kind of got the concept of where I'm looking for pullbacks here. We want to locate the point of breakdown and see a close above it and then look for a retest to enter on most of these charts. And so most are going to be that way. I think that pretty much covers up what I wanted to talk about in this uranium update, guys. Again, to summarize, I do think that the bottom is in for our uranium stocks. If you guys bought this major crash, kudos to you. You guys got an excellent entry. If you did not buy this major crash, you can still get an excellent entry. My bids, guys, I started buying these things a lot higher. I made my first buy on NXC, I want to say, at around 240, and I averaged down to about 130 at this point in time. So I've been buying a lot longer, and if you were to get in now, you'd essentially be buying at my current average cost. So you guys are getting a great deal here. There's no doubt about that. Don't think that you've missed the boat or missed the train because you didn't get in on this capitulation move. The upside potential is still massive. For NXC, just to start off, we're looking at a cross of over $3.30. That's 3 times from where we are now, guys. So don't feel like you've missed out on anything. On UUUU, my average entry started off, I started buying in the $3 range, expecting this level to hold. Was prepared if we saw a breakdown, which we did, and I bought the dip and I averaged down, and I'm now in profit on my UUUU holdings. If I remember correctly, I'm in profit on some of them. I'm just barely underwater on some of them. But yeah, this was like some people panicked and sold here. For me, it was just another buy the dip opportunity, and then I was not concerned at all because I'd done my research on the fundamentals and was aware that this would happen and it may occur. For GVXXF, my average buy is right around entry as well. So you guys are getting essentially, you're getting to buy where I bought 6 months ago when it comes down to it. So excellent places for you guys to get in, and the best is yet to come on these stocks, guys. That's all I have for this uranium update, guys. If you guys enjoyed it, please give me a like, a share, a follow, recommend me to your friends, and give my new page, Credible Stocks, a follow as well. I will be posting updates on all these charts on Credible Stocks. That is where you guys will find them from now on. So be sure to give me a like and a follow there. And if you guys have any questions, feel free to comment on the video, and I'll try and get back to you guys as soon as possible. All right, thanks, guys, and I hope you enjoyed it.